Hello viewers, we'll be going over natural gas. In this video, we'll be going over the day-by-day probability model, how we find the models, and the forecast model for natural gas. So back to the technical analysis. Today we're down 3% on the 1-hour chart. We were approaching to oversold RSI. We are currently at negative MACD, and we start to see a convergence in play on the 1-hour MACD. If we extend out to the 4-hour chart, we are approaching to negative MACD, and we may dip a little bit lower. And if we expand out further to the daily chart, what we have here is we are fairly close to the positive MACD on the daily MACD. And last week we made a low, and that is indicating a support around the price of $1.61. And if we do manage to head down lower, do expect that to be our next support level. And as for resistance, if we were to continue on higher with this slight reversal, I do see the next resistance being around the price of $1.97. Reason why, we had a past resistance around that range as well back in February 19th. And we also have a gap down back in January 17th to January 21st. So do expect that to be filled and encounter resistance. And we had a slight minor resistance back in March 11th as well. So if we were to head up higher, that price movement is roughly around, I would say, let's mark that price movement is roughly around 9.3% to the upside, and to the downside it is around 10.5% back to where we made all-time lows. So let's head back to the day-by-day probability model. Again, this model is now available in the link below, so do check it out. So as the days progress, we have on the 7th day a 25% chance for natural gas to climb higher between 0 to 5%. On the other hand, we have a 75% chance for natural gas to fall lower between 0 and negative 5%. So let's check the day-by-day forecast for natural gas. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to, I would say, June 11th, 2014 to September 5th, 2014. So let me point out why these two charts are similar. So what we have here on the beginning of the current trend, we averaged below the middle Bollinger Band. And next we made a reversal to touch the upper Bollinger Band. And we touched the upper Bollinger Band twice, and we have 2 instances of that. And in between we dip below, nearing the bottom Bollinger Band. So we have those instances there on the current trend. And on here, we start to see a similar pattern here as well, average below the middle Bollinger Band. Next, we proceeded to approach quite near to the upper Bollinger Band, and we have 2 instances of that. And finally, in between, we see it take a slight dip below the middle Bollinger Band, nearing the bottom Bollinger Band. So we have those points there. So what we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. And one thing to note, since we have not approached the bottom Bollinger Band quite far enough as compared to the trend in question. On this trend, we have an instance where we are quite near the bottom Bollinger Band, and on the current trend, we have some ways to make it to there. So do take that into consideration. And so the model that we just examined was June 11th, 2014 to September 5th, 2014. Back then, natural gas was up around 4.5%. And again, do take that into consideration. This is near the bottom range of the trend, and this is still in the middle range of the trend. And if we examine closely to the technical percent, we examine the current trend, what we have here, down 27% from monthly high, up 7% from monthly low, down 1% from 10 moving average, and down 1.5 from 20 moving average, and 5% down from 50 moving average. So the trend that we just examined, quite similar down percentage, 26% down, 19 basis points from monthly low, 3% down from 10 moving average, 3% down from 20 moving average, and 5% down from 50 moving average. The only major difference is the monthly low. This is 19 basis points compared to the 6.5% on the current trend. So do take that in consideration. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.